Well, during last week's small cap share shootout, we ran out of time before we could get to what seems to be a ubiquitous favourite of analysts right now, Sabvest. It's an investment group which has been listed on the JSE since 1988. And I won't tell you why it's amazing. I'll let Dr Adrian Saville, Chief Executive of Cannon Asset Managers, do that, who released a note today titled The Compelling Investment Case of Sabvest. Evening, Adrian.
Evening, Michael. Good to be with you.
Now, investment holding companies traditionally trade at a discount, and it's the same with Sabvest. This one seems rather large. What's the Sabvest thesis?
As you note, the company's been listed on the JSE since the late 1980s, and over that time, under Chris Seabrook's watch and very careful hand, the investment company has generated an extraordinary return on capital. About 30% per annum average over the full haul, and in the more recent past, just over 20% per annum, which is a long way ahead of the JSE. And notwithstanding that very impressive investment record, the company is almost entirely unstudied. It's largely unknown to the South African investment community. And for that reason, partly for that reason, it trades at a very big discount to its net asset value. Just last week, you could buy it for 35 Rand with the net asset value at 55 Rand. And that net asset value is represented by not only good, profitable, well-run businesses, but arguably that net asset value is understated because a large part of the portfolio is unlisted companies, where if you were to sell them, you would realize a bigger price, and that would lift the net asset value.
And often that's why these investment holding companies do trade at something of a discount, because if you look at their listed holdings, you say, well, I could go directly and not have to pay the management fee, but it's those unlisted assets that really are compelling in this portfolio.
In part, but just to pause on your comment about the management fee. Interestingly, in the case of Sabvest, in contrast to many other listed investment holding companies, there is no management fee, and the management interest is rather represented by Chris Seabrook's Family Trust Holding, which owns a large stake in the company and controls the company through an ordinary and end share structure. I think that's a point worth coming back to because it partly explains the discount. But,
liquidity.
You're not paying a management fee. I think that's perhaps part A, and part B is these assets are hard to get your hands on. If you look at the nature of the underlying businesses. The largest unlisted asset is SA Bias Industries, which is the trimmings business that anyone who knows the textile and garment industry in South Africa will know this name extremely well.
And that goes back once again to its roots in the 80s. So come back to the issue around liquidity, because there has been a recent liquidity event that has actually made Sabvest easier to get your hands on and should unlock some value.
Well, apart from the ordinary reason for the discount that you don't want to pay the full price for the assets in any holding company, there's been this second attribute, which is the ownership structure, and the shares have been extremely tightly held and almost impossible to get your hands on. Cannon's been very successful over the years to slowly acquire a meaningful stake in the business, but it has been an incredible exercise in endurance and patience. But very recently, one of the long-established shareholders put their line of shares up for sale, and those were transferred to a new raft of outside shareholders, which just in the last week we've seen already an improvement in liquidity. And I suspect along with the release of this parcel of shares, we are going to see, because of capital events, Sabvest issue new shares alongside these released shares.
But
and I think
why did they sell now? Why did they sell now, Adrian? Isn't that a warning sign or a flag to investors that perhaps the good years have been harvested and, rather unkindly, as some private equity managers tend to do, then exit right at the top?
Well, look, I think if that was the case, that's not outside of the realms of possibility, but if that was the case, arguably it would be Chris Seabrook that released first. But it wasn't. It was a family that has been partnered with him for a long time. I'm not intimate with the background or their personal circumstance, but I suspect that after being partnered with them for a long time, they've taken the decision to move on, and that released the block of shares. I think if we were to go in search of the sort of the sinister thesis, it would probably be the Seabrook Family Trust that released the shares, which isn't the case.
What is the outlook then for investors looking to try and get their hands on some Sabvest, which are going to be as rare as hen's teeth anyway, despite this liquidity event?
Well, I mean, not as rare as in the past, so more easily available. You're buying into a very a neat basket of assets, which well beyond the South African assets includes a healthy dose of offshore assets. About 1/3 of the portfolio is made up of offshore assets, including an Asian listed, unlisted garments business, plus a portfolio of US technology companies that spans from Amazon and Alphabet through to Thermo Fisher and Alibaba, the Chinese company. So you've got, alongside the unlisted, a set of South African listed and international listed assets. You're paying 35, 40 Rand for 55 Rand worth of NAV. Our suspicion is that that NAV is higher, closer to 60. And the return on equity that you're getting here is in the region of 20% per annum. You're getting a great basket of shares with good lifting power. It is not a generous dividend payer. I think we've got to throw that caveat in, and that the management's nature is to retain any surplus cash and reinvest, which is generally not an attribute that Canon likes. We far prefer the discipline of healthy and regular dividend payment.
But historically speaking, management have reinvested rather well.
Exactly. And so we are comfortable with them hanging on to surplus cash for other investments.
Dr. Adrian Saville, Chief Executive of Canon Asset Managers, with the compelling investment case of Sabvest.